A whopping 90.35% of Michael Burry's portfolio is in these four stocks: GEO, QRTEA, CXW, and AJRD. Of course, Michael Burry's famous from the movie The Big Short, where he made billions of dollars for his investors shorting the housing market. And in recent times, he's been incredibly bearish on the stock market and on the economy. Michael Burry has tweeted saying that he thinks we're going to enter a deep recession and the stock market is going to fall. And so he's in these four stocks. Interestingly, three out of the four really coincide with his overall bearish thesis, and one out of the four is a bit curious here. So I wanted to take a look at these four stocks and try and connect it to Michael Burry's overall bearish sentiment in the market overall. So the first two, the Geo Group and Core Civic, uh, uh, these kind of make sense. These are real estate investment trusts that invest in that hold prisons, like invest in the prison. So these are truly defensive in nature. When the economy enters a recession, the there's likely more individuals committing crime and getting convicted for crime. Prison population is increasing. The need for prison in the need for the prisons increases, and so not so much because of the demand is increasing and that nature of it, but uh, more so the fact that it's not negatively impacted from falling GDP, right? Other companies, when economic activity is decreasing, their revenues are going to fall and their profits are going to fall. That's not the case for Geo Group and Core Civic, right? If the economy enters into a recession, they're not going to lose revenue, they're not going to lose profitability. In fact, they might experience an increase because demand increases, right? So I can see this as a significant defensive play connecting with his overall bearish thesis on the economy. So these two make sense. And also, valuation is favorable, trading at a forward PE of 8.8 for the Geo Group and a forward PE of 13.23. Another reason valuation is favorable for these companies is a lot of, I shouldn't say a lot, but many pension companies, pension funds have divested away from prison companies, prison stocks, because of I guess it's the perception of investing, making money off of prisons doesn't look good, and so they've divested away from it. So it's not like they're buying up shares of this, and so as they've sold it, that means less buyers means lower price. And so Michael Burry has said, all right, I don't have any qualms with investing in prison stocks. He's going ahead and buying these stocks at favorable valuations, which connects with his overall bearish thesis on the economy, right? So these two make sense, completely make sense. Um, this is the one that I'm gonna say really is a disconnect with Michael Burry's overall bearish thesis. Is the Curate retail. It's a video commerce business. It makes money from when you're watching connect videos on connected TVs and buying stuff while you're watching. This company helps connect that, helps, so it's kind of capitalizing on a secular tailwind, and it's incredibly attractive in terms of valuation, trading at a forward PE of just 6. So I can see that part of it, but it is a bit cyclical in that if economic growth falls and GDP falls, that might slow its growth. But I guess Michael Burry is saying, you know what? Yeah, that might be the case, but the valuation is so attractive, I'm willing to buy this one stock. So this is the one out of the four that's not a true defensive stock, a defensive play that will continue to benefit even if the economy enters into a recession. Aerojet Rocketdyne Holdings is, a true defense thing. Jets and defense company, all that. That's where they benefit from, and the increase in military spending across the board from many countries as a response to the Russian invasion in Ukraine is likely to persist. And it's one of the stocks. It's not at an attractive valuation as his other stocks, trading at a forward PE of 27.58, although it does tie into his overall thesis of being bearish on the economy overall, expecting a recession, a deep recession, and a prolonged recession. Defense companies tend to keep their revenues and profitability even during recessions. The likelihood of war and defense needs doesn't decrease in the event of a recession. So, in that regard, his overall portfolio is incredibly bearish on the economy, following up with his overall public statements on Twitter. If you've been following him, many comments saying you guys should sell your stocks. The economy's going to be in a recession and the market's going to crash, and so on and so forth. So, connecting to it and buying stocks at attractive valuations. And Michael Burry, of course, has a wide following because of his success in 2008, 2009, when he made so much money for his investors, calling the crash in the housing market. All right, so this has been an interesting video. I hope this has shed some light into Michael Burry's portfolio for you. I enjoyed doing this, and as always, thank you for tuning in. I really appreciate your viewership. I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.